Hello and welcome to the Breaking Bitcoin Market Update. It is November. It's a Thursday, November the 4th, 2021. Welcome. We're glad to be back. It is, of course, Justin Day. Justin Wise is joining us today. We got a lot of exciting stuff to talk about. Let's go flip Justin's camera on, shall we? I think I got Justin here already connected, guys. Let's get a gander. Let's see here. Let's get a, all right. Seems like my Discord's suddenly acting up, but it's all right. We'll give it another shot in just a moment. How's everyone doing today? We, of course, have some exciting market action to cover today. Everything from, well, the fallout from the Fed's announcement to begin tapering yesterday, to the BOE holding the line on rates, to, well, traditional indices like the Nasdaq pushing up new highs. Well, Dixie's doing something similar, guys, and of course crypto kind of dippy today. We're gonna get into all the news and technical analysis. Very excited to do that, but in the meantime, let me get this webcam up here. Oh, looks like it should be. Bear with me, guys. For some reason today, it's just one of those days. Let's have a look here. All right, here we go. Bada boom.
Better.
Yes, sir. All right. Do share, Justin. I do have you on screen now, and do tell. How are you this afternoon? How are you keeping? Good to see you again on screen. Oh, I see you got a new studio set up today, or your office. Your office is really coming together.
Yeah, it's not bad. I like it. Was originally going to finish the structure of one of the outbuildings out here on the new property, but we had a little bit of change of tenants, so I have repurposed a previous bedroom into my office, and I quite like it. This is definitely one of the nicer spaces that I've been in. It's not as shiny as the previous office, but I like that. It allows me to focus on my work. So. Good to see you guys this morning. Thank you guys for joining us for another morning of technical analysis, afternoon, evening, depending on where you are. Yeah, Jack, how you doing this morning?
Not too shabby, doing all right. Very excited to get into it, of course, and as always, looking forward because now with this new show format, every day we're getting a kind of different take on the markets. So I'm very excited to hear what Justin's thoughts are once we get into the TA segment. But in the meantime, guys, we got 90 minutes in store, so I'm going to put Justin away for now, and we are going to get into the first component of today's show. We're going to get into the news, guys. We got some interesting news to cover today. Got quite a few stories, actually. So I'm going to go ahead and get into them right now, and then we'll follow up by looking at the audience engagement in a few minutes. We'll get into the crypto bubble, see how the alts are faring today. Kind of a mixed bag in the space before we get into the technical analysis and the AMA portion of the show. All right, let's go ahead and get into it. This first news piece. Actually, give me just 1 second. All right, that's better. This first piece comes from CNBC, titled "European Markets Climb as Investors Digest Fed News, Bank of England Holds Rates Steady." Yes, just to quickly recap, of course, the U.S. Federal Reserve, this was yesterday, said it would begin to curb the pace of its monthly bond buying program later this month. I think currently they're buying about $120 billion of bonds a month, and they're going to be tapering that at a tune of like $15 billion a month for the next year or so. So yes, Fed announces the bond buying program going to be tapered, and of course the BOE came through today. Analysts and market observers were expecting the BOE to hike rates, but instead they're going to hold off on the interest rate hike over there, and Eurozone business growth slumped to 6 months low in October. Supply chain bottlenecks and induced logistical problems caused input prices to spike. All right, well, I'm not going to go too deep into this, guys, because we're going to be covering a bit of the fallout when we take a look at the charts. The charts, I think, will tell the other half of the story, but yeah, that's just a little update. We did cover the Fed announcement midstream yesterday, but indeed today, breaking news, BOE holding the line on interest rates. Not bad. Let's go ahead and continue. We got another piece here from Finbold titled "Bitcoin Remains the King of ROI Despite Hyped Meme Coin," says one study. All right, let's see what this is about. One Reddit user has analyzed, quote, every single shilled coin from 2017 to 2021, publishing their findings on the subreddit cryptocurrency Cryptocurrency on November. All right, yeah, in the subreddit r/crypto. The research included the period from January 1st to December 31st of each corresponding year, and all cryptos on the list were ranked according to the return on investment (ROI) from the date of the initial coin offering until October 30th, 2021. It's worth noting that, as per the research, Bitcoin has the best return on investment from the date of its ICO, but when compared to many other cryptocurrencies, it delivers a lesser return on investment year after year. However, the flagship digital assets still returned 213% in terms of ROI this year. And here's a little chart posted. Notably, with Bitcoin's ROI compared to other assets this year, Bitcoin outperformed most metals, stocks, currencies, and indices. But altcoins, of course, aside from ranking second in terms of ROI, Shiba Inu happens to be the biggest rise in 2021. Other notables include Doge. All right. But still, I could see how Bitcoin, obviously, if you're going to measure from the beginning of time, or at least the beginning of this whole crypto game, yes, Bitcoin still remains on top, but I guess they have to look a little deeper. I mean, can't imagine Bitcoin's still on top in ROI in terms of just this year alone. I guess that's the whole point. It isn't, but it still kind of demonstrates that despite all the meme coins, despite all the hype, Bitcoin is, was kind of, I guess, increasingly less risky asset, and indeed it has less, I guess, exponential returns to be expected from here on out. But because it's safer, I guess it's not going to perform potentially as wildly as something like SHIB did this year. But on the flip side, you got a safer asset, and of course you're still getting very, very generous returns. So I still think Bitcoin represents one of the best investment cases for like new crypto investors. Even if a lot of the exponential gains are already kind of come and gone, I think Bitcoin is still kind of a safe investment. Justin, what do you think? You think the returns on Bitcoin will remain respectable?
Yeah, I mean, listen, we have so much potential market share to come into Bitcoin. So many potential use cases for Bitcoin. I mean, the original use case of Bitcoin is still there. To have fungible, transferable money that is digital and easy. Bitcoin's fees have remained exceedingly low. If we look at that in terms of Ethereum gas fees, the security of Bitcoin has never been compromised. It's just such a wonderful project, and it's still got so much wonderful development happening on it, and so much to do. It's become, it's almost in the crypto world, it's almost too big to fail. I really don't see any flippenings happening. I don't see any other form of settlement occurring, at least in the near future, really only ever. And you got to remember, we're still, even though like we're mainstream and more in the news, like, the use and use case of this for, average individuals to be using to receive salaries in, we're starting to see this with like popular people. For example, Aaron Rodgers of the Green Bay Packers the other day, he's doing a little NFT thing, and he made a very, very nice comment about Bitcoin and how he's starting to receive a portion of his commissions for promotions in Bitcoin as well. So just little things like this show that people who kind of get it and who are kind of at the front, avant-garde, they're taking advantage of this. But we've got still so much room to grow. So as far as the returns year after year, I think that they're likely going to diminish naturally, but I think that they're going to be the most consistent.
Agreed. For a kind of a hold and forget it kind of investor, I still think Bitcoin remains very exciting. But you know what? Most people that approach me, friends, family, noobs that know I'm into crypto, they ask my advice. Like Bitcoin doesn't like usually charm people. Again, probably because it's the price, the sticker shock, the fact that the exponential gains are probably just not on the table as they were in the early days. So I guess a part of this is greed. But I always encourage these people, listen, don't be too greedy. Bitcoin's still going to return very attractive returns. So if you want something a little safer, certainly it's a blue chip at this point, and you might want to diversify to something riskier as well. But there you go. Bitcoin holds its spot, and enough of this piece from Finbold. Let's go ahead and get into another piece here from Crypto Potato. Google invests $1 billion in Bitcoin futures provider CME Group. This was big news today. Let's see exactly what's behind this investment from Alphabet. CME Futures, the futures exchange giant that offers regulated Bitcoin services, has secured a massive investment from Google worth about $1 billion, aiming to transfer its core trading systems to the cloud. The news was first reported by Wall Street Journal and informs us that the tech giant will provide its cloud services to the CME to, quote, power markets and handle trillions of dollars in trades each day. The two parties have agreed on a 10-year partnership. CME will strive to onboard new users faster and develop new features using Google's technology, such as their AI software. CME is, of course, one of the world's largest exchange operators, market cap of nearly $80 billion. Google Cloud is the fourth largest cloud provider, has about 6% of cloud market share, and the two of them now are going to be wedded in this new marriage. So there you go, Google Cloud, the official service provider of CME now. CME. All right. Nothing, nothing probably too exciting, I guess, on the surface, but still, I wonder what CME hosts their infrastructure on now. Seems like a pretty big shift. All right, let's go ahead and continue to the next piece. Not Today talks about, this is a heartwarming story, if there is one in crypto, guys. This is indeed the dream. This is the crypto dream of many, let's be honest, like average to do people in this world who get into crypto. To do it on the back of stories like this. Which kind of newcomer investor wouldn't want to be kind of like this person here? So let's cover the story. Rob, a 35-year-old supermarket worker from Northern England, has managed to earn life-changing money with the help of Shiba Inu. This is, of course, according to an article Fortune just posted. Fortune magazine talked about how Rob stumbled upon the token's woof paper, I should say. The British man had his light bulb moment. He said, "After reading the woof paper, I was hooked. I just couldn't believe the words." I just believe the words, he said. He started putting his hard-earned money into Shiba Inu in February when the Dogecoin rival was still under the radar of pretty much everybody who's not a die-hard canine meme coin fan. The dicey bet worked out tremendously well for Rob. He invested about $8,000 over time, so he dollar cost averaging about $8,000 since February of 2020. His holdings appreciated 1,200 times by May, and the month the meme coin gained mainstream attention for the first time. Rob said he was extremely emotional after cashing out $500,000 and seeing the whole sum in his bank account, saying, "I come from quite a poor background. I never could have fantasized about having this much money." Overwhelmed with happiness, the lucky buyer quit his warehouse management job. I thought he was a supermarket worker. And after making it with Shiba, now he's busy being a stay-at-home dad. Apart from taking care of his son, Rob is also active in the burgeoning community. He still holds a 7-figure sum worth of Shiba, as well as several other Dogecoin offshoots, such as the Doge Killer Leash. Let's see here. Yes, of course, talks about how Shiba's taking a bit of a cool off right now in terms of price, but still, nonetheless, one supermarket or warehouse worker, 35-year-old Rob. Well, congrats to you, my man. It's nice to make it in this game, right? To the tune of a few $1 million, take care of your family. This is indeed the dream, guys. So I think if there's anything worthy of celebrating on a day like this, well, maybe a guy like Rob. I'm certain most of us would love to be in similar investment shoes, right? What do you think, Justin?
It's you're right. It's kind of the cryptocurrency dream, and cryptocurrency is one of those few places where this dream is alive. We talk about we obviously my main focus in life is trading and educating people on how to trade. But I would say that there's a YouTube video that I made before I went on my sabbatical that talks about 5 crypto plays that I had invested in and how those things had worked out for me, and plays like that. I'm still on the I'm engaged in NFTs, and I still look for pre-sales and ICOs and things of that nature. It's just one of the few opportunities that exist in this world where you can turn a small amount of cash into life-changing money. So it takes, obviously this is the outlier story. There are far more. I mean, listen, for every one story about somebody who won like fantastically, there are 1,000 stories of retail individuals wanting that, who bought the top. So, as always, do I recommend this to be people's do I recommend that anybody, let me put this very carefully. If individuals are foolishly looking for things that are going to make them money, you have a 99.99% failure rate. If, on the other hand, you find something that you're passionate about and you believe in it and you understand it and you understand how it could make your life better and the world a better place, And at that point, with that type of asset, you enter into that market, you make that investment. That's exactly what I did with Bitcoin. I've been a holder of Bitcoin for a long time. I'm going to continue to be a holder for Bitcoin for a long time. I see the technology. I understand the technology. I understand the community. I understand how it can make the world a better place. And it takes that courage and conviction to hold. Really, when it comes down to money, that's what we're talking about. You need the conviction and the courage to hold through the good times and the bad times until you kind of have that, a wonderful prize at the end.
Yeah, well said, indeed. This is the opportunities, or the opportunities, the once in a lifetime opportunities some of us are attempting to seize in this space. I think most of us here in the community feel that way. So hats off to Rob. Hopefully the rest of us make it along with him. And indeed, it is something remarkable because how many retail traders ride things up and then all the way back down. In this case, I'm glad to hear Rob also took a bit of profit out. And taking care of his life. So that's also very important, guys. Don't forget to take profits, especially when you run into some insane gains. All right, with that said, let's go ahead and get into the next story. How we doing on time? Still got a generous amount of time to get into a couple more news stories. Let's get into this next one. Comes from Decrypt. Binance says it's trying to find the scammers behind the Squid Game token. Crypto exchange Binance has said it's trying to hunt down the scammers behind the infamous Squid Game cryptocurrency. Yeah, that one we covered last week. Yes, the big Squid Game scam, the big Squid Game rug off the back of the big Netflix viral show. Binance says it's trying to hunt down the scammers behind that damn Squid cryptocurrency. They made out about $2 million, guys, you might remember. And his team is deploying blockchain analytics to identify the bad actors, said one spokesperson. Quote, our security team has launched an investigation. It's a gesture of goodwill, the spokesperson added in an email to Business Insider. CZ, Binance CEO, who often goes by the moniker, he weighed in on a blog post saying today, because these scams are becoming more commonplace as the DeFi space grows, I'd like to take this opportunity to remind users that DeFi is not without its risks. We have to see anyone who loses their funds. We hate to see anyone who loses their funds due to scams and other cyber crimes, CZ said. Well, CZ, in this case, Pancake Swap and your BNB coin certainly did help facilitate a lot of people getting wrecked. Well, any luck, maybe some what Binance can do, unless they're unless some of the funds have made their way through Binance, unless they're using Binance to actively launder the money, and maybe they can seize some accounts. But fat chance. Looks like this might be just a token of goodwill from Binance, but otherwise, I think most people got rugged like Squid, learned a very expensive lesson. With that said, let's go ahead and get to the next piece. Blockworks has this one titled Polkadot reaches a major milestone with the launch of the parachain auctions. Indeed, Polkadot trending lately, and it's on the back of this. The ninth largest digital asset, Polkadot, with a market cap of about $53 billion, is set to launch parachain auctions today. The launch of these auctions will finally enable projects vying for a spot within the Polkadot ecosystem to launch their own crowdfunding efforts using DOT pledged to their cause. Some of the most highly anticipated projects planning to bid a launch on Polkadot include Moonbeam, Ethereum-compatible smart contract parachain, Centrifuge, which is a decentralized bridge between the real world and decentralized finance that will let users finance the real-world assets without banks or other intermediaries, and the GALA network, another Ethereum-compatible smart contract platform optimized for DeFi. These three projects are among approximately 10 projects vying for funding via crowd loans enabled by the auctions on the Polkadot network. All right, so there you go, guys. This is really Polkadot coming online, guys. These are the first few major projects. If you're not too familiar with Polkadot, kind of the one chain to kind of rule them all, kind of give a proof of stake chain, allowing these parachains. These parachains, I guess, are kind of like these parallel chains that run alongside the Polkadot main chain. Do check out the Polkadot white paper, or a how-to on how Polkadot works. But indeed, if you want to be a project, you want to be plugged into the Polkadot ecosystem, you need your own parachain, and in order to secure a chain, you and your community have to bid on the cause. So of course we're expecting a few of these leading projects to secure themselves a spot and come to life sooner than later on the Polkadot network. Very promising times. Polkadot could in fact be a major solution to scaling and other issues in the space, guys. Very excited to see Polkadot come out. All right, let's continue. I don't think there's much to add on that. Cointelegraph has our next piece. All right, here's your spoonful of hopium for today. This should certainly get the moon juices flowing with a headline like this. Warning, this might also presage the top, guys, but let's just entertain me here for a minute. Indulge this titled Bitcoin will peak at 253k, Ethereum at 22,000 this cycle if the 2016 halving bull run repeats. All right, a simple comparison shows just how much room BTC and Ethereum price action have left to grow. All right, Bitcoin may be over 7 times higher than its last halving, but if history repeats, the number could grow another 300% or more. As tracked by on-chain data resource Ecoinmetrics, this month BTC/USD has the potential to eclipse estimates simply by following historical precedent. Bitcoin currently trades blah 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 blah. All right, let's see the chart here. I mean, I'm sure you guys get the idea. We overlay price performance of the previous bull run onto the current price cycle, right? It's not to say that we're going to repeat the exact same pattern with the same magnitude, but this article tries to bandy that concept here. And so, like I say, guys, this is moon juice, but at the same time, 250k? No, that was on the upper band of what I was hoping to see this season around. I'm not going to lie, I'm a little dubious. I'm not so sure we're going to see 250k Bitcoin, or where's the Ethereum one? Is this on the same chart? I think it is, yes. The Ethereum one, the top of Ethereum would take us to 22,300. Very, very nice. Yeah, 22,000 Ethereum this cycle. I'll settle for 8, but yes, I would certainly take $22,000 Ethereum. How about you, Justin? You down for a 250k Bitcoin?
I mean, listen, nothing would make me happier, but I read this article, and I can touch on this briefly when we go over the TA factor, but I just think that this is garbage data. Honestly, and the reason why is because you have to look at market capitalization dominance to get an accurate comparison, and they don't filter for that. So back, for example, during the peak blow off in like November, December 2017, Bitcoin market cap dominance stood at about 65% of the entire market, meaning that so just for people who don't understand what that means, 65% of all of the money invested in the cryptocurrency markets was in Bitcoin, which allowed it to have that massive appreciation, right? I mean, that was part and parcel of why it moved like that. And nowadays, Bitcoin dominance stands at around 40 to 45%, and that's been pretty static for quite a while, for a good chunk of this year. And a lot of that is to do with the launch and the marketing campaigns of alternative coins, altcoins. And I don't really see those going away. We can certainly see when we see market dumps, if we see some kind of big market cyclical correction like we have historically in cryptocurrency. However, Willy Woo and other token economists make a good case that we might be that might not be a thing anymore. Of course, you have the overshadowing possibility of bubbles popping and market collapses and all that kind of stuff that just exists. But keep in mind, nobody has ever made money betting against the markets yet. Significant money anyway. So, like betting that the economy would collapse. So, we could definitely see a return back up to the 60% mark for Bitcoin dominance. But that's not going to happen at the top. That's going to happen at the bottom. That's exactly what we saw. It's exactly what we saw during previous market dumps. Bitcoin dominance goes up because altcoin investors have less confidence in their positions than Bitcoin OGs. However, prices still go down. It's just all the money flees the market, and the money that does remain goes into something safer. Because Bitcoin might correct 50%, but altcoins are going to correct 80 to 90%, for example, during those exams. I know, Alex. I know about the Big Short and everything. I'm just, I'm talking about I'm really more talking about like Peter Schiff, like the economy is going to completely collapse and you're going to be screwed. Like, Michael Burry made good money counter trading, but he was in drawdown, a lot of pain. I think that's a very rare nuanced example, but you are right, of course. So I don't think that we're going to see Now it's possible to see these prices. I just don't think that based off. I just don't like the study.
Yeah.
That's comparing. It's comparing apples to oranges.
Indeed, this is more of an entertainment piece, guys. This is certainly not very substantive. I would not put too much weight on this, but nonetheless, I am confident we will see a $200,000 Bitcoin someday, and even the $20,000 plus Ethereum. I just don't know if it's going to be this cycle around, let alone in the next couple months. But this is kind of what this article tries to float, guys. Again, it's more of a your daily dose of hopium. If you needed a little booster today, if your portfolio feels a little droopy, maybe this is a little pick-me-up for you guys. 250K Bitcoin. With that said, enough of that. We only got another news. 3 minutes left to cover a couple more news. Let's get into this one. This one's from Yahoo News, and it talks about the Kleiman versus Wright case. Bitcoin's trial of the century kicks off in Miami. That's this week. The civil trial of Kleiman versus Craig Wright kicked off in Miami Monday. And it may provide insight into some of Wright's claims that he is Satoshi Nakamoto, the inventor of Bitcoin. Wright, an Australian computer scientist and early cryptocurrency pioneer, has been claiming to be the synonymous creator of Bitcoin since 2016. The suit posits that Wright did not act alone. According to Ira Kleiman, his late brother David, a fellow computer expert and longtime friend of Wright, was the co-creator of Bitcoin and is entitled to a share of a trove of Bitcoin, currently valued about $66 billion. The suit alleges David Kleiman and Wright formed a partnership establishing an entity called W&K Defense Research, and they use it to mine Bitcoin. And then, of course, we know what happened later, guys. Mr. Kleiman sadly passed away, and Wright may or may not have made off with their stash of coins. According to emails shown to the jury, Ira Kleiman agrees that his brother was solely responsible for mining the entire stash of Bitcoins in question, and has accused Wright of swindling through a combination of forgery and deceit from David's estate after his death. Wright denies the allegation and says that David Kleiman was a friend and confidant, and the two were never partners, and that he was alone. He acted alone as the Satoshi Nakamoto. A panel of 10 jurors selected Monday will have 3 weeks to hear the evidence and decide the fate of Wright and his team and the so-called Satoshi billions. Let's see here. So they got a paper trail here. In his opening statement, an attorney from Kleiman estate established a timeline for the jury that aimed to demonstrate Wright's conflicting statements about the nature of his relationship with David Kleiman. In those emails shown to the court, Wright repeatedly referred to David Kleiman as his partner and his business partner until after the latter's death in 2013. The lawyer told the jury that after Kleiman's case, Wright's story began to change. After Kleiman's death, Wright's story began to change. He continued to call David his partner, but started to distance himself and claimed that David had transferred and and shared all intellectual property into Wright's possession. All right, the story does go on, guys. It's quite a lengthy one. It does cover all the details, and I've heard there's some spicy things. I hear. The lawyer, the defense attorney, or the attorneys for the Kleiman estate fired shots, not literally in the courtroom, but they supposedly made a fool of Kleiman, and Kleiman. Well, everybody's looking forward to hearing Kleiman rebut this when he gets on the stand. A lot of this is covered in this very lengthy Yahoo article covering all the details of the case. You guys want to check it out? Description on YouTube, we'll have the link to this below. Now, one final piece I need to get to today. This is something Alex brought to our attention. This coming by way of Patrick Dugan on Twitter, and he's talking about this new IRS provision number 650L, or is it I? Reading up on IRS provision 650 inserted into the infrastructure bill set to pass in the House tomorrow, Friday. In July, we were making a huge fuss about the broker thing. Yeah, you guys remember this? This little piece inside the infrastructure bill would potentially qualify everybody from node operators to wallet software writers to so many people within the infrastructure of the crypto system would have potentially been deemed brokers, and that was fraught with so much headache. Guys, what we have here is ostensibly 100 times worse. Criminal felonies, including all individuals and all tokens, all mixing, all custody. This Twitter thread goes on. Taproot mixing your hose. You become a felon for using wasabi. Mining pools that aren't doxed, right? So, you guys, you can mine together with a mining pool on most networks. Mining pools that are kind of anonymous, that aren't fully doxed, that's a felony. NFTs costing over $10,000, apparently that's a felony. Programming payments in installments to keep sums under $10,000, also a felony. Writing software, even some JavaScript app logic in a wallet to assist equals jail. Wake up, folks, this is not a drill. I only saw one person who is mutual raising alarm bells about this for months. Now Laura Shin covered it, and I read the one thing. Wow, we are 2 days away from losing everything. U.S. persons will become completely cut out, residents and citizens. Soon, the only way a person born in the USA will be able to do anything on any scale with these blockchain technologies without KYCing or everyone or becoming a felon will be to either A, leave, and B, operate with a non-US entity and ideally a non-US employees and directors. Then we'll have to globally adopt some kind of decentralized minimal KYC with encrypted, blinded POR, no home address, no docs, that can confirm someone's not a US citizen. And we'll just turn our backs to the US residents. Rest of the world has spectrum or of more financial freedoms, less regulations, guys. The way to avoid the scenario where U.S. persons living under harsh capital controls is to raise a ruckus like we did back in July and remove 650I from the infrastructure bill. We have less than 2 days, and we need to act. We have to prevent this bill from passing. And is there a link to some kind of what's that? A link to... What's that thing where everybody signs? What's that word slipping my...
Petition?
Petition. Yes, there a link to a petition that might do much? I certainly hope we can mobilize and do something now. On the one hand, I think even if this does pass, it seems like wholly impractical to try to enforce this. But it is troublesome. It is extremely concerning to think that, by tomorrow, Congress could pass an infrastructure bill that would be absolutely draconian in its approach to cryptocurrency. Very, very concerning. Final story, Justin, any thoughts on this?
Yeah, I mean, honestly, to the reach that we have, for those of you guys who are Americans, like this is definitely one of the most one of the most troubling things that we've seen in cryptocurrency. The problem is multiples here. Yes, this is going to be very hard to enforce. The problem in America, and as with all things, but particularly in America, is that once things are on the books, they're very hard to get off the books. You can just look at the historical examples of like terrible laws that have been passed in the United States. Take some low-hanging fruit, things like Jim Crow laws, segregation. Those are easy low-hanging fruits, but also like payment, payment laws, taxation laws, all these kind of things that they're passed and they happen and they get on the books, kind of in the dark of night, right? And it's not a huge deal for a while, but it's just that, slowly over time, since this is now a law, laws are required to be enforced by federal agencies, which is going to require over time investment into those agencies and expansion of their powers, expansions of their tools, just all these things. And then, of course, you get the free market, the free market that rises up and says, oh, wow, there's all this government money sloshing around that now needs to be invested into these solutions so that this law or these group of laws can be enforced. You can see that with, like, for example, in cryptocurrency, like the need for regulators to have facts and data about who owns what or who needs to get taxed directly led to the rise and the eventual purchase of companies like CipherTrace. So this is extremely concerning, but there's only, as terrible as all this is, this author is right. People's voice still matters. The world still works. This is the way it works. So the only thing that individuals can do is contact their local officials and tell them that they are extremely not in favor of this. Usually, like I wrote my senators for this. So I think that everybody who's in the United States, you have a day to do this. You guys should go do this right after the show. Go do it right now. This matters. You may not think your voice matters, but as with all things, it's kind of this subconscious or unconscious kind of unconscious. What's the word I'm looking for? Like unconscious, like I don't know what the word I'm looking for is, but it's, if your attitude is one of defeatism, that your voice doesn't matter, whether or not you believe that it does, I really know, and I've seen it, that influences, maybe not directly, but maybe just this is the way it works. But that means other people are going to feel that way as well. And if, on the other hand, if you adopt an attitude of strength, that your voice does matter, that your opinion does matter, that you can change things, then I fully believe that other people feel that way too. So do not sleep on this. Act on this.
Well said, well said. All right, guys. That's all we need to add to this. We'll follow this closely. We'll see if indeed this will be some ground shattering development to hit our space by tomorrow. Keep an eye on this. This whole infrastructure bill, this provision, all very, very troubling. With that said, that would be your look at the news today, guys. Thank you so much for kicking it with us for this intro segment. Let's go ahead and get into the live chat. I'm going to shout out the audience. And you know what I should do, actually, is look at the bubbles very quickly now. Yes, SHIB is down pretty dramatically today. SHIB's one of the big losers. Negative 20% day. Hex is down on the 10% today. Maker giving some back. It was up yesterday. It's down 15% today. Sand, finally Sand begins to pull back from its epic run. Same with Mana. Both tokens benefiting from the metaverse launch announcement thingy. They're both down a little over 15% today. So kind of an ugly day among some tokens, but there's some that are equal parts up. We have the likes of Caderna. KDA is up almost 17%. AMP, the AMP tokens up nearly 20%. And we got a smattering of others that are up double digits. CRO, XCC, Omizago, Holochain, eGold, VChain, Axie, no, not so much Axie. Axie's up just 7%, but it's decent, and there's quite a few losers in between too. So alts are a little 50-50, guys. We're gonna be getting into the TA in just a moment, so stand by for further insight. Fifth Ronin first in the chat today. Big shout out to Fifth Ronin on YouTube. Ron Legato is with us as well. Somebody by the name of, I'm not gonna mention, but shout out to Mr. Liberinos here. Justin Wise is with us, of course. David Rice. Great morning, all. How are you, Justin? Shout out to David Rice. Good morning, good evening from Sweden, says Fifth Ronin. Sweden. Cavano Trades, good morning. Big shout outs to you. D-Live Crypto Cats, hello and good afternoon. Okay. Well, we certainly are after the moon, aren't we? Because we seem to be heading down, back to Earth. Daniel, hi guys. Big shout outs to you on YouTube. Xavier on YouTube as well. Big shout outs. David Rice, can't wait to get to the moon. Gotta get those shuttles ready for the Mars mission. Whew. Gotta get to the moon first and refuel. Texas Blues, Justin, hey brother. Texas Blues is with us on YouTube. Cavano Trades, asking when the Jack cam. You know what? I'm a quite private person. I'm not sure if I'm gonna go full cam on you guys, but we'll discuss it maybe one day. Midwest. I've worked with Jack for 2 years and still never seen what he looks like. Jason, honestly, you and me look pretty similar. I wouldn't say we look that much different. Anybody wants to know what I look like? Just go look at Jason's photo. I swear, the two of us could be brothers. Jason, the way Jack is getting on here, except I'm like a 6-foot version. I'm a 6'1" version of Jason. Sorry, Jason. I lucked out on this one. All right, let's continue. Crypto Jenny. Hi, everyone. Big shout outs to Crypto Jenny on D-Live. Zybernetics on YouTube joins us again. Good to have Zybernetics back. Regs crash markets 99%, criminalize owning crypto. Yes, that's kind of what these regulations could potentially do. Criminalize crypto and crash markets. I don't know. At the same time, I don't see blockchain solves this quote. Yeah, Zybernetics. I feel you. There's still, blockchain can do a lot, but it doesn't overcome some very fundamental, human, societal, political, economic problems. CryptoCats, Jack is the Satoshi Nakamoto. I guess I am the Satoshi of the CC crew. Let's see here. Let's see here. David Rice. Damn, must be nice to have a whole room. I got a small closet. Well, Dave Rice. Not everyone can be as blessed as Justin Wise with his chill new pad in the Colorado Rockies. Franklin MC, good morning. Looking forward to a great show. Big shout outs to you. Cavano Trades, to mention any word updating us on the freer grid index. It's appropriately pulling back today, 73 over 100. It's Mew Mew time. What in the hell is Mew Mew time? Is there a there are coins related to this topic. I can't really get into it. Crypto Cats, I'm not playing that game. All right, XVG, yes, XVG is one of them. Let's get to the last couple comments. I might have, whoa, so many comments today, guys. I'm out of time. I would shout you all out. Shouts to B-Flow, Rhino TD, Crypto Cats, ETH1, Moonshine Fuel, Smoke, and so many others, guys. I would love to read all your comments, but we're low on time. We got to get into the TA and the request section, so let's do it. Let's see here. We're going to be hopping into Justin's chart view right now. All right, he's got his chart up, so we're moving over to the next scene, everybody. Let's do it. Transitioning. Now, I've got to fix a couple things on screen, but otherwise, we are mostly good to go. Justin, I got to fix his screen layout because it's currently set up for Jason, but otherwise, I think we are good. We got the BTC.D weekly chart on Coinbase with the Hakanashi candles. Haikanashi, Hakanashi, whatever. And here we go. Here we go. BTC.D. He's on screen, all centered out. Looking pretty sharp. I'm going to dive into your requests, guys, and start putting them on screen as well. But otherwise, I think we are mostly okay. Justin, you've got the screen, and I'll be back in a few minutes.
All right, sounds good. Thank you, Jack, for taking us into the TA and going over the news. Hopefully, you guys are doing well today. Thanks. Got quite a few people in here, so we're gonna try and keep this. Nice and light and keep you guys engaged. All right. So as always, let's talk a little bit about. Before I dive into this, I want to go over just a little bit of a teaser of some things and products that we're going to be releasing here in the future on our website and our for our members. What I am currently working on right now, what I'm in the lab cooking up, is I am updating the Pathways to Profit course, making sure that it is edited, adding new material and content to it as well, enhanced descriptions, some exercises, new homeworks, new assignments, things like that, as well as updating our assessments, kind of protocols for how we assess individuals, students that are going through the class and course, learning how to trade. Following that, we're going to be publishing a beginners course for individuals that want to learn more generalized things. PTP is really for individuals who kind of have a basic comprehension of trading, although the way the course is structured is anybody can come in and not know anything and learn how to trade. We have the introduction section of the PTP course. But following that, once the beginner's course is done, I am going to go back and what I'm working on right now is I'm working on a series of courses for regular technical analysis. There are aspects, of course, of technical analysis that are going to behoove people quite greatly, that are going to increase their level of confidence, that are going to increase their level of competence, and just make them feel like a more rounded trader. So, for example, what's the first thing you should be looking at when you're looking for a trade? And we can even do technical analysis irrespective of trading, just analyzing, what direction is the market moving? How can you define that objectively? How can you determine the momentum of a particular asset, i.e. what is its trend strength? What is the volatility of an asset? That's going to correspond directly to your risk management. How should you be positioning? Where should you be taking your profits? How should you be setting your stop loss? All of these things that are really very intrinsic and important to being a successful trader. And then following that, understanding when to switch strategies based on that information. Are we looking at a trending market? That's going to correspond directly to momentum and trend strength, to the same thing. Are we in a ranging market? What strategies are there for trading that? So understanding when to trade those things, when to avoid them, all of that information I think is going to be pretty invaluable. And for that reason, I think that's going to allow me to be a little bit more have more breadth in the analysis that we do on the streams. Okay, so let's get into BTC/USD. We've been showing this chart for the last few weeks that I've been on here. This is just simply the BTC/USD. This is on Coinbase, although you can use Bitstamp, Bitfinex, whatever large ticker you like. It doesn't really quite matter when it comes to trend strength here. But for Heikin-Ashi, we do have a couple things here. Heikin-Ashi, of course, is going to average out overall price movements, and this is very useful for seeing the overall direction of trends, and it lets us filter out the noise of price fluctuations. There are going to be, in any In any trending markets on higher time frames, on lower time frames, you're going to have your dips and bobs and weaves and things that can, excite you or make you scared or make you think that the trend is going to break. But if you zoom out and you look at the higher time frames and you just base your overall analysis on that, particularly if you're looking at what to do with your hedgings, particularly what to do with your long-term positions or your futures positions or things of that nature, these charts are very, very helpful. So we've got, so as far as Heikin-Ashi is concerned, we still have a sustained uptrend here. Despite the pullback here closer to the $60,000 level, we have not yet had a Heikin-Ashi trend flip, and that is something to watch for as we move into Sunday and move into Monday, because as I said, although this chart still looks constructive to me, this chart and I would say the futures information that it corresponds to that, for example. So when we get into futures, we want to look at things like open interest. We want to look at funding. We want to look at whether funding is positive or negative. And there is a direct correlation to that in market cycles and market tops and bottoms. So for example, when we tend to be at market tops and we see funding get very positive, funding is always going to be positive in an uptrend. And that's just the cost of doing business. What that means is that there is more liquid. So on futures platforms for perpetual contracts, which are the most popular contracts to trade Bitcoin, there's always an equal number of long to short contracts, always. But what can change is the volume or the multiplier of liquidity, of leverage in either direction. Meaning, although there is one long contract for every short contract, the actual amount of leverage that is required to assume that position can be different. i.e., when funding is very high, it means that individuals who are in long trades are on average using much more leverage than individuals who are countering their trades, who are taking the short position. So that obviously means that even though individuals in short positions are losing money when the market is trending up, they are in less risk of liquidation because they are using less leverage, right? The risk to their liquidation comes in price actually moving up dramatically, whereas individuals who are using high leverage, price does not have to move that far to liquidate them. So you can see these rolling waves of liquidations, and these kind of come in at these turning points in the market. So if we were looking at the chart right now and futures premium was very high, I would be relatively concerned about a significant correction here. Now, not to say that we won't have one, but something that's important to point out is that we don't have that right now. It seems like traders are being extremely conservative with their leverage as far as long positions are. Funding is still positive. There is still more leverage, of course, on the long side, as there should be in a bull market. Nothing else makes sense. But traders are not. But the long side on future perpetual contracts across the entire market. So this is all the futures markets combined. Are not using insane amounts of leverage overall, as they are typically when we see an overheated market top. Something else that I want to point out: if the market does significantly correct from here, like very significantly correct, like take out this low, we're not quite there yet to see that as far as trends goes. But if it did, this would be the first time in Bitcoin's history where we ever put in a market top via a double top. In the form of a swing failure pattern. We've never seen that before. Not to say that can't happen, but just to point that out. Historically, we've never seen that before. So, okay. So positive Heikin-Ashi trend here. This candle is going to close. This current weekly candle is going to close on Sunday. We do see volatility here starting to diminish, which is not a bad thing to see. We do see momentum starting to reduce here as well, which is something that we can see, which is you're going to see momentum diminish toward the end of a rally or a trend. I don't yet see the signs here of complete failure. I'm not the biggest fan. We do continue to trace upwards here a little bit higher on the Heikin-Ashi. We did break that TD/ST line that was put in by the previous TD sequential 9 count to the upside, and we are on a 5 of 9 on the TD sequential. So that means we could have following this is going to be the close of week 5. We could have 4 more weeks of upside here and more. TD sequential can turn into a TD countdown as well, which is going to stretch from a 9 to a 13 count. But overall, just looking at the trend strength does not look bad. So nothing too concerning as far as the weekly chart goes. Let's go ahead and switch on the weekly chart. I'm going to have to here to regular Japanese candles, and we're going to look at this as well. Okay, So we have an increase in weekly volatility here. The reason we have an increase in weekly volatility, so excuse me, I was actually, when we look at the candlestick patterns, increases in volatility are going to be characterized by long wicks or shadows, as some individuals call them, and the lack of strong candle bodies. This is consolidation. This is indecision in the market. This is not imminent of a trend reversal. For example, we can see during Bitcoin rallies, we put in lots of dojis, lots of long wicks, and we can still continue up to the upside. But just something to watch for. Confirmation for some sort of reversal here if individuals are going to be reversal traders, but we're not quite there yet. It's going to be our third weekly doji. Sellers have not yet had the ability to push price down, but we are seeing signs of distribution. Now, again, in conjunction with offside premiums, that would concern me a lot more. So I don't yet see the signs. So what I mean by this, let me be a little bit more broad and simple here. I can see a pullback from this area based off candlesticks and based off the weakening momentum and heightening volatility. I don't really see the signs of massive distribution and the large switch to the downside. Everything still looks good on that. So we'll wait and watch for that. Going over to the 3-day though, we've got a little bit more confirmation here. Again, no massive breaks of significant 3-day moving averages here. No scary red candles here on the 3-day chart. No turns of the moving averages. So again, on the higher time frames here, we still have a good positive bullish trend. There can be retracements. There's always going to be pullbacks in bullish trends. And it seems like we are experiencing a little bit of that right now. Of course, we've got a red candle, but again, nothing massive, nothing overly concerning here. We're still in good positive territory. No turns, no curls, no nothing like that. Let's go over to the daily time frame. All right. Somebody had pointed out, let me make sure I've got the right one on here. Yep, Eller's EMA Smoother 60. Okay, let's look at where we're at in conjunction with the baseline. This is the daily time frame. This is the daily chart. This is what we're going to be using for our daily positional or swing trades. This is what we teach day in and day out. By the way, well, it's a Graville V2. I do not have the Rolly on today. It's a Graville V2. Okay, so a daily chart is what we're going to be using for almost all of our positional trades. Again, we have that bullish momentum. Let's look at momentum in general. Momentum can be characterized visually through candlesticks. Momentum can be characterized through the use of an indicator. And on the chart, I have one of our most popular indicators, Wada-Atar Explosion. Wada-Atar Explosion I use to characterize momentum right here. The way momentum is characterized via Wada-Atar Explosion is with a rising or falling explosion level. That is going to be that. This is the area chart. This is going to be the area portion of the chart. It's an area. I don't know any other way to describe it, but it's the more rounded out, not the columns. So we have rising momentum pretty much through all of Bitcoin's recent uptrend break at the baseline and appreciation to our current top, the current all-time high of Bitcoin. Let me point that out. And we do have that waning and falling momentum. That exit signal for that long would have came somewhere around here based on an entry. Let's see here. Let's find it. Right on this candle right here would have been a nice entry. So again, we talk about this a lot. This is good. We have high volatility, low momentum. Those are good areas. Typically for entry. Well, you're looking for that volatility break. So we have a high volatility area, which is all high volatility is going to characterize a ranging market typically. And we do have high volatility. We have a lot of wicks in this area and we have price bouncing around a central mean price. That's the definition of volatility. And then we have that strong candle body close above the baseline or above resistance. I talk about that ad nauseum. And then what I really like about this particular signal is that you get that nice long signal on October 21st. So about a week before, about a week, 10 days, perfectly 10 days before All Hallows Eve. We have that nice long signal that pretty much carries you all the way up, just using WADA until WADA closes the column below. So again, entry right around 47,800 and exit above 60,000. Nobody can complain about that. One of the last good hurrah trades. Of course, we did get in on this one here as well, utilizing the WADA system too. So let's look at chart structure here. Let's see here. Since we had such a parabolic rise from the $42,000 dip up to the all-time high, there's really no market structure for me to draw here or plot out. We can use the only areas are pretty far away from us. So let's see here. We've got this order block right here, which was deterministic on the way up. Let's get my drawing tools out. And boom. right there. Let's delete that one. So that's pretty far away. That's really the only. It's really the only order block that is acting as that is a controlling order block right now. And as we can see, the baseline is above that. So for those of you who are looking, for those of you who are feeling bearish in this area, for those of you who feel like we are going to continue to get a little bit of a correction, I would really be using the daily baseline, whether you're using the Hall 60 or whether you're going to be using an EMA or something a little bit smoother. That's still going to be putting us around the $56,000 to $54,000 area. That does kind of coincide nicely with what Jason was talking about as well. Another possible factor as well is to look for a liquidity grab below our recent low here that was established by this candle. Let's go ahead and get a ray on there right there. That's going to be a little bit below 57,653. So basically that area becomes your pullback, baseline bounce entry area. Other than that, if you're looking for daily trades here, we are in a no trade zone looking for daily Bitcoin trades here. We don't have positive momentum. We are above the baseline, so we are only looking for longs at this point in time, as dictated by our trend analysis. But we don't have any confirmation for short trades. We need to be below the baseline for that. So I am still, my directional bias on this, just overall as a Bitcoin guy, is to the upside. It's not always that way, so definitely not a moon boy. But yeah, I'm still seeing continued upside here. But again, the signs are starting to stack up that we consolidate here before a move up. So what we want to, and this is going to be a surprise. This is always how it happens. We're either going to see further consolidation here before a break to the upside, and that catches almost everybody off guard. You enter on those candles, by the way, because they have follow through. I highly doubt that. I really highly doubt that we have a liquidity grab above the recent all-time high. To manufacture that is very difficult. It's not impossible, but yeah, but 60% of the time it works every time, right, GB Wally? So if you're looking for that low buy-in area, I would be looking for those pullbacks to the daily baseline. Again, worst case scenario is wicks potentially down here, but I don't really see that happening either. That controlling order block. If we're starting to hit that order block, then the strategy then becomes to look for the short, breaking that baseline, and either taking the initial short signal or taking the baseline rejection. So once price breaks down below the baseline, we get a little bit of consolidation, and then it pops up, tings the baseline, and then we take that short trade kind of on that glorious entry. So basically a setup just like this. You see we crash below the baseline. We put in, and then we rally back up to the baseline and immediately reject from it. Not the best trade in the world right there. Still a good reversal baseline entry, maybe down to 1 ATR. Because yeah, I definitely want ATR. Because look at the low momentum here. Whenever you have low momentum or just low small candle body sizes, you're going to get some pretty tight targets. So probably hitting a 1 ATR trade on there and then stopped out at break even on that. But again, there's that candle body close, that strong candle body close above resistance, above the baseline. Again, we can see that our indicators weren't there at that time, but that's an alternative strategy that we talk about for entry as well. All right. 4-hour chart. I do want to look at the 4-hour chart. Let's get. No, I don't want that. Hold on just a second. Get. Nope. Get ISIS, and then let's also get WADA. Okay. A lot of scripts. All right. Boom. Current cryptocurrency, Wadatar explosion. If you guys want to use the latest version. And again, I just use the default settings here with the false positive filter, has given me the best results. Let's get TV sequential off there because I do not want that. Okay. All right. So a couple things to note out here on the 4-hour chart. No bottom feeder signals. We're not quite yet at the bottom. I would be looking for a buy signal on Bitcoin on this time frame. Over the next like 8 to 12 hours. So as we move into like tonight, like late tonight, possibly early morning. So for most of you guys, particularly in my time frame, I'm not trading at 8 p.m. at night. So I'd probably be looking for most individuals are probably going to be finding an entry on this early in the morning. When we've got a little bit more of a bounce established. Keep in mind, Bitcoin's doing something similar that we're going to see on a lot of altcoins as we kind of progress through this analysis today. A lot of altcoins just moving down to previous levels of support. So again, the idea that the evidence that this is a top and we're on the way down for a significant correction, in my opinion, that evidence just isn't there yet. We're just ranging and consolidating, right? That can be distribution. Of course, it is distribution. It's always distribution, but distribution does not always lead to markdown. Distribution is always going to happen at relative market tops, and you'd have to be silly to not think that anybody would be relatively smart in taking some Bitcoin profits here. So we'll see. We still got a lot left to go here. So again, we are putting in on the 4-hour chart since the 27th of October. We are continuing to put in higher lows. We can see that this attempt to push liquidity down, but it's not able to break down. So we do have a lot of entrenched buyers in the $59,000, $60,000 level. I know some individuals I was seeing in the members lounge earlier, kind of watching for that break of 60,000 to hedge. Of course, do exactly what your strategy tells you to do, as you've outlined it, as you've learned. But again, my eyes here are on the upside, so I'd be watching for that range trade play pretty close here. Over the next, we've got a couple more 4-hour candles, but we can see ISIS spot is just getting close to the oversold territory. We can see the last ISIS spot signal here, and the bottom feeder signals conjuncting with that nicely, all giving nice good trades. All these bottom feeder trades are actually like really bang on here. Here. Well, you guys can see them on the chart, but really good. That's again one of my most popular algorithms for getting those low buy-ins. We don't have that signal generated yet, but you could be watching for that. You could be watching for that. Sorry, my set just died. Be watching for those low bottom feeder buy-in signals. Okay. But yeah, so as you guys can see, volatility is high right now. Momentum is low. High volatility, low momentum with pretty clearly delineated support and resistance is indicative of a ranging market. We don't have a breakdown of that yet. And actually, I would say that we are seeing lowering momentum on this downside movement that's been lasting for the last 24 hours. So, okay.
How are we feeling? We are a little bit after the hour. If you want, you can continue with some of your analysis, Justin, or we can hop into the request whenever you're ready.
Let's go. Yeah, I want to point out that we'll talk about BVol here for just a second here.
Yep. Did you go full screen?
Yeah, I'm going to go full screen right now. So let's talk about Bitcoin dominance here. We can see altcoins are not doing terribly. Like I noticed this morning as I was preparing for the show, I've got 4 altcoin positions right now. They were all mildly in the green, and then Bitcoin put in a nice red candle. It pulled everything down, and now they've popped back up as well. So we do see Bitcoin dominance again finding resistance around that 47.5% area, pulling back a little bit. Altcoins still having a lot of room to grow here in the space. A lot of room for altcoins to grow here in the space. And a lot of altcoins are looking really good. And as we go look at some altcoins here in a little bit, I expect that we're going to see the exact same thing. The exact same thing that I'm seeing on my active positions, for example, that we're just ranging. That we've got, with a few exceptions, we've got clearly established support. We've got clearly experienced resistance. Most of the alts have kind of trend flipped out of consolidation, pushing to the upside, and now they're just attempting to break up above that. So. This is what I wanted to point out earlier when I was talking about Bitcoin dominance. Let's go back and look at Bitcoin dominance in November 17 and December 2017 during these last big massive rallies. And let's actually use the compare function so that we can just look at BTC/USD here. We'll just use Bitstamp here. Nice. And let's send this to a new rate scale. Okay, here we go. So that way we can kind of collaborate, these big spikes in Bitcoin's price. And as you guys can see, when Bitcoin puts in these big spikes in price, it goes hand in hand with crypto market capitalization. But as you guys can see, when we have these kind of big peaks, or really, as far as that research article that we were looking at earlier, the only real historical example of that is this one right now. Is the bull market top in November, December 2017, where market capitalization was already extremely high, and then Bitcoin's price it 2x from 10K to 20K. But you guys get the point. Market capitalization was already in a high level of dominance. And then that allowed all that retail money that sloshed in at the market top to just go into one thing primarily. It's just different now. There's so, just look at the meme coins, for example, Shiba Inu, look at DeFi, look at NFTs. Like there's all these other things for the money to go into that are hot in and of their own right. So, not to say that I don't think that we're going to experience, like, again, you can see it here. Here's January 2021 when we experienced that last kind of big pop and then the correction. Market capitalization was already up very, very high relative to altcoins. So, or excuse me, not market capitalization, market dominance. I'm sorry, I'm using the wrong terms. Market dominance relative to altcoins was there. So that money just had kind of one big thing to go into. It's different now. Bitcoin dominance down relatively low. So. Okay, so let's get out of this. I do want to touch, let's just look at Ethereum real quick. And then we'll get into the request. Okay. Strong weekly uptrend on Ethereum. Again, lowering momentum, but we are relatively close to mean price. We're not really overextended to the degree that I'd be concerned. Like, look how overextended we are here when we have a massive correction, and we're about the same way here. We have a correction right down to the baseline. So again, I think that I see nothing but real positive stuff here. Sorry for you having to continually readjust the chart. Sorry.
It's no problem as long as you pick one, stick to it. No problem.
we're probably going to stay in the. We're probably going to have to not do the full screen.
Yeah, no problem.
Then I don't have access to the tools. Yeah,
exactly. This is good.
So, continued weekly uptrend here on Ethereum. I like that we're moving up slowly and we're not yet overbought. We do got a little bit of a hook coming in, but again, so if we do experience a correction here, I think it's going to be I think it's going to be a healthy one. I think it's going to be back down to our baseline levels. I think it's going to be back down to previous support or resistance levels. I'm not really seeing these no blow off tops, nothing like that. So, things are good. Yeah. So let's see here. Go down from the weekly to the daily. Daily curling again. Let's see if we got any divergence here to point out. No, really none to speak of. Again, not a broken uptrend here on Ethereum on the daily time frame. We've got a ways to go down to the baseline around 3,700. That is a pretty steep correction. We do have an order block here, of course. Let's mark out the last green candle in the uptrend, the body of it. That is what an order block is, the last green candle in an uptrend. We can see how that's currently controlling the market. We can see that when the market dipped from the attempted swing failure pattern, the attempted swing failure pattern that Ethereum put in, we only came back down to that controlling order block. Again, double bottomed back up to a new top. A spinning top doji, actually, that's really a long-legged doji. That's a spider doji. And then a bearish engulfing candle. So again, we can have some more downside here. Pretty strong support in the $38,000 to $39,000 area, and that baseline is going to be creeping up. But I think Ethereum is likely to do what Bitcoin did here and pretty much move sideways with a slight tilt to the downside. And typically when we see that, we break up and continue to the upside. So things to keep in mind. Let's get down a little bit more activity here on the 4 hour. Again, looks like we're going to be getting a buy signal here on the 4 hour creeping up on us. Why don't I have... See, let's just for fun, Alex, let's put bottom feeder on yield Ethereum here. See what we got. Pretty sensitive here on the 4 hour, but not doing a terrible job. Bottom feeder was proprietarily designed for Bitcoin, but overall not bad. I am liking the signals. Liking the signals from ISOspot a little bit better there. Okay, so getting close to getting a buy signal here relatively soon on the 4 hour time frame. We do have, let's see here. Yeah, I mean, overall, I don't dislike this. Continuing to put in, we've got, let's see here, scroll back. Continuing to put in higher lows, liquidity grab, resets, higher low. Let's see, I think we're going to put in a higher low here. We've got a controlling order block right here. It's going to be this candle right here. Come in so I can get that bad boy. Basically, right. Oh, no, that's not right. I'm sorry. Scroll that down just a little bit. That's a little too. Yeah. A little bit. We're basically there on Ethereum. We're at the order block. I didn't draw this. There we go. That's almost perfect. So again, we can have another 2 to 4 hour candles of downside here. I'd like to see that level be hold, but when it comes to levels, guys, keep in mind that levels are never going to be perfect. This is something that's very important to understand. Levels are never perfect, right? You almost never see if you draw a trend line or if you draw a support or resistance level, price is most likely going to go around that. It's going to go a little bit below it. It's going to oscillate around it a little bit because those levels are best fits. And then it's going to depend. It's a random walk. It's going to depend on what market participants actually decide to do at those levels. And sometimes you can have more excessive selling or more excessive buying than otherwise. So it's not that your lines suck. It's not that your lines don't work. It's just that you have to take into account the chaos theory of nature. That not everything's going to be perfect the way you draw it out. So when I draw this trend line, when I draw this order block line, looking at a level of support, and I see my indicators getting close to their oversold levels, and I start to see momentum in candlestick, as far as candlestick analysis start to diminish here. I'm looking for an area to buy in. So if we really wanted to be if we wanted to be surgical with this, we could zoom all the way down to something like the 15-minute or the 5-minute and be looking for those big volume spikes, those big red lower time frame candles coincided with volume spikes in an area like this. That's going to give you that sniper entry that that everybody wants to post on Twitter. And that may be above or below the line that you've actually drawn on your higher time frame. The point is not for your line or your level to be perfect. The point is for you to have an idea of what you want to do in this area. It's just the start. So, all right, that's all I got. That's all I got for Ethereum. So, Jack, let's get the show on the road, brother.
Brilliant. That was the intro, guys. Let's go ahead and get into the request line next. We have quite a few requests here, guys. Justin's very generous with his look at each chart, so no promises we'll be able to get every last one, but I'll certainly try. All right, first request of the day. Let's put it up on screen. We got the following from Remy Davis on YouTube. Can you take a look at GALA? GALA. Yeah, we can look at GALA. Why not?
All right. We're going to look at, first off, let's just go over to CoinGecko and search for GALA. Number 152 market capitalization. So we do got some room to grow. Let's see where we're at with market cap. About 700 million market capitalization. I really want to look at total supply. Okay, so got a lot of room for circulating supply to grow. I'm not exactly sure what their growth is. About 35 million total compared to 7.5. Circulating is interesting. We can just see this overall downtrend. Okay, so this might be an interesting one at 152. That means it's fallen quite a bit. It means it was higher at a previous point in time. And let's go look at markets so I can make sure that I am doing this on the biggest. So GALA USDT is going to be the biggest market. Pretty big spread, actually, for something at 152. I'm not going to lie. Pretty decent volume. And that's about 50% of the volume. So we're going to be doing our analysis on GALA USDT. It is also here. Okay. So this did the traditional flip. Did this was this? Hold on. Is this an ERC20 token?
I will answer that right now.
Yeah, it is a contract. All right, it is a contract. So this likely launched on Uniswap, Hotbit, and then made its way to Binance. So we're going to be, if we want to get a little bit more historicity, we could go back and look at that. But it's going to probably do for our purposes just to look at the tether pairing.
Definitely one of the blockchain play to earn gaming plays. So this is considered a gaming token.
You're saying this is Squid Coin?
Oh no, you're talking about GALA. GALA. Oh no, definitely not a squid jobby. I would hope not. It's not a squid. Yep.
All right. Okay. Let's see here. Pretty. This is a good ranging asset, right? With good trends. Let's go. I'm going to keep this on the 4 hour because we're going to just have a little bit more data here. So we've got a nice range established. Let's go ahead. Again, I'm gonna be doing some Since especially on these like newer coins that don't have a lot of data yet, I am going to be doing some more traditional TA guys. So you guys, we got a lot of people here that are PTP or looking for an edge or looking for different things. And we've got people here who don't understand what the heck I mean when I say the words PTP. So we're just going to go ahead and mark out some levels here and try to get a good trading plan going on. All right, so first thing I'm going to do is mark out what appears to be the controlling order block, or what has been the controlling order block for support. And then I'm going to mark out what appears to be the controlling order block for resistance. And then we'll talk about upside targets and downside targets, and then try to get into some kind of strategy on this bad boy. All right, so I have just marked out the last red candle in an established downtrend that has not been broken significantly. That was not broken significantly. We can see price return to that liquidity pool. Keep in mind, there's always going to be, especially as price gets down there, liquidity tucked away in those areas, because even though market makers are going to move their orders up as price appreciation kicks in, they're not going to keep all the liquidity down here. They're going to start gauging it up and increasing their position as it goes up. But they're always going to want to defend their positions, and there's always going to be stank bids are one point. But also just the individuals who actually purchased in this area, they do want to protect their position and martingale down around that area. So always liquidity down there below, a little bit above and below these areas, which coincides with what I was just previously talking about, how your levels are never going to be perfect because liquidity, where exactly it's at on the order books, is going to be different just based on the day. Okay, so we'll mark off the controlling order block up there. And we're going to go ahead and I'm going to go ahead and select this as the controlling order block for the upside. I think it's the best fit for the current area. It act as current resistance on our last rally. And now we have a nice range that's established. Price has ranged pretty much price has ranged here, with the exceptions of these blow off tops, but price has pretty much ranged here since September, when it basically just a little bit after it launched on Binance. So this is good. Excuse me, this may not be good, because what this could be is pronounced distribution, right? Keep in mind, with these contract tokens, with these Ethereum tokens, there is this fundamental aspect that you have to keep in mind, and that the chart can kind of show you if you're paying attention, which is that the largest holders of this token, got in on the ground floor, and now that it's been listed on a large exchange, it's an opportunity to exchange previously bought coins at this new highly appreciated market price. What really matters is the interest that comes in after that. Now, obviously, this was not a pump and dump. This pushed up to a nice level of price appreciation, and price has held a pretty fair level since then. So this is not bad. This actually looks like a pretty constructive chart to me. Are we trending right now very strongly? No, we don't have a pronounced, or dare I say, parabolic uptrend that you really want to see in cryptocurrency. For those, I got it at a great price and now this thing's just mooning. We're talking about, the Bitcoins, the Shibs, the Ethereums, our pirate chain. So this really looks like the best opportunity here is going to be a ranging strategy for this particular asset. So again, we've got good delineated support at about 0.075, 0.078, and overhead resistance at about 0.11. It's about 0.11, between 0.11 and 0.12. So that's kind of the way I would be playing this. Buy low, sell high. We actually do look like we have a buying opportunity pretty much right now on GALA. We've got a weak, high volatility, low momentum mini downtrend. Let's just zoom in on that right here. So again, high volatility. Why is it high volatility? Because of the size of the wicks. Why is it low momentum? Because of the size of the candle bodies, or might I say lack thereof. And again, we see here on our momentum oscillator, which is ISOspot, we are in the oversold territory, and we're putting in a nice little doji. Hammer doji would be, would be perfect here, but we'll take that little kind of micro spinning top. That's not really a spinning top, but as you can see, it's far more, the shadow is far more to the downside than the upside. So again, being bought back up right now. Again, as I pointed out earlier, we're going to see a lot of examples of this, of prices just mostly returning to levels of support. When we're in a bull market, which we still are in, when price returns to a level of support and seems to stop there, it's a buying opportunity. This is just trading 101. So So you've got a couple decent targets here. You can take it back up to the top of the range. You can take it to a fib extension of this recent movement. You can kind of hold on and look for that liquidity push back up here. That's always going to be not for the largest portion of your profits. I would say on something like this, get in, get out somewhere near the mid of the range is where you want to be taking a little bit of profit, and the top of the range certainly. This does look like this looks like a range play trade all day. So, and I'd say that the buying opportunity seems to be in the short term now. It doesn't mean we can't dip lower, but we do have our baseline of support here as well, which I think is likely going to hold. But also keep in mind, we have this long protracted consolidation period. This really looks like accumulation to me. And then we have a liquidity grab to kind of shove everybody out, and a buyback at that previous order block. I don't think that price really has any reason to push back down into that trading range. If it does, then you're just kind of looking at a reaccumulation area following kind of that push up. So, yeah.
Well, that was an extensive look at GALA. How about that? Gonna get the DLive chest percolating in just a minute, guys. If you are on DLive, drop a few lemons in the chest, because get ready. Lemons come your way in about 60 seconds. You've been warned. I'll go click that chest in a moment. Introduce the next request first. Jag077, please, let's look at SLP. All right. SLP is next. I'm going to go click distribute on that DLive chest in just a moment.
That smooth love potion. All right, so number 283. Total cryptocurrency market capitalization, room to grow. Let's see here. Infinite total supply. I really don't like to see that, but again, Shiba rose on pretty much an infinite supply. Again, we've got an Ether token, got a contract token. Let's go and see kind of where we're at. Pretty much sustained uptrend, nice hook, and we seem to be on the way back down. When we get into the chart, we'll look at that. Let's look at our growth here. 24-hour up 57.1%. Does that seem right over the last one? We'll see that on the chart. 70% up in the last 7 days, 14 days, 30. Okay, interesting. All right, now let's go look at the markets, make sure I get the best one. SLP USDT is going to represent the lion's share of the markets. Okay, so let's go take a look at this smooth love potion. Okay, yeah, this is a pretty decent one. All right, so this is pretty interesting actually, because obviously we have the launch on Binance, and unlike a lot of tokens, this decides to go immediately to the upside. Massive sell-off, rear rally, massive sell-off again, and basically this is where we're going to mark off our first order block right here, guys, because this really delineates what's going on, and that is going to be the last red candle in a downtrend before a trend flip. All right. Again, nice. That same nice doji candle there that I was talking about. I do like this bottoming more. Like if I hadn't seen this part of the chart, I do like this bottoming more than what we just looked at with GALA. The reason why is because there's just a little bit more momentum on the way to the downside. So, all right. So let's scroll over. Also, we're going to mark out our order block here. Last green candle in an uptrend. Boom. And I think that's where we're going to keep it, because we can see that that's really the level here. It was resistance here. It was resistance here. And again, this is just that same chaos theory that I was talking about when I talk about how your levels aren't perfect. Let's scroll over. We can see that again, acts as resistance. Didn't even see that chart, did we? Acted as support. All right. I just love to see that. Acted as resistance. All right. It's almost like I know what I'm doing. Okay. So let's talk here. Let's talk turkey. Now we've got, okay, so price came all the way back down to that order block and oscillated around it on went from high volatility to low volatility. And now we've got a big break of that. I really like to see this actually. Smooth Love Potion doesn't look bad. When you see that long pronounced period of contraction, again, probably the most, I don't really like to do this, but if you just throw the Bollinger Bands on there, you can see that exact same thing. Look how tight these babies get. Bollinger Bands contract, and as they start to expand and pop. So remember that periods of low volatility to a certain X degree lead to a period of high volatility. All right, so we've got a big pop in SLP, pretty big retracement, but honestly, after all that accumulation, I would be really surprised if that was all the oomph that had to put in. Now, keep in mind that was a pretty big move. Was that about 50% in the last? Well, this is just today. We've got a pretty big movement today. Let's see. So about 100% pop up to the upside, and then we've got that. Yeah, we've got about a 14. But from the top, this is almost a 30% correction. So keep that in mind. But this isn't bad. I do kind of like this. Let's go down and see. We don't have that much distance. Well, depends on how you kind of measure it. So we got about 15% downside back down to the top of that order block. Again, we don't want to see price return to that level of accumulation at all. If an uptrend is going to be sustained. Is this the buying moment? I would really say no. I think what we want to see here is sideways, something forming kind of like a bull flag and then continuation back up to the upside, or a little bit more of a pullback so that individuals have an opportunity again. So you've got about a 15% space from where price currently is back down to the top of that order block, I think, to really get a better entry on SLP. After kind of 100% appreciation, even still being up about 50% from this accumulation area, definitely be looking to take some profits here. Start trailing that stop is not a bad idea right here. I kind of think you'd want to set that. You would want to trail your stop starting below, maybe right here at the bottom, around 5 cents, about 6 cents maybe. 6 cents might be a little bit more appropriate, and then let that just kind of run as this thing rises. You basically got uncharted territory. This is a downtrend. There's nothing ranged here. So you don't have a lot of established or instantiated liquidity. You're above established liquidity right now to the sell side. So things look pretty good, honestly, from here up. You do have this. Well, actually, that is a little concerning. Let's take that into account. Okay, that is where price turned around too. So see this consolidate. See this accumulation area right here. This accumulation area is acting as overhead resistance. So that was the trade right there. Seeing this accumulation, taking the trade up to this level of previous accumulation. These are all trapped buyers. Remember, anybody who bought here and didn't profit on this rally and held on the way down, or martingaled on the way down, they're now back at exiting at their average price. But a break of that is going to be pretty good up to that 20-cent mark, which is another 2x, another 100% appreciation. So let's mark that area off so we can have a little bit of data. I think the best way to do this is to look at the VPVR, this range, zoom in on it, and mark that out. I think that's going to be the best way to do it. So I am just going to mark out the high volume node, area there, and then take VPVR off. This is where, so between this red area is where the highest quantity of volume is transacted at these price levels. So what that means is that that's where individuals who entered at these areas, that's where the majority of their money was spent. This is a pretty relatively simple concept. So what that means is that there's a whole lot of liquidity there to the sell side when we come back to test it. And as you can see, we basically pierced it. Remember that areas of high liquidity are like, I use the train analogy a lot. So periods of low volume or low volume nodes are like train tracks, and price is the train. Price likes to move through periods of low liquidity or areas of low volume by price very quickly, and periods of high liquidity or high volume by price are train stations. Price likes to stay inside train stations for quite a while. It likes to move very quickly across train tracks. So this area is it's just something you got to deal with if you're trading SLP. We do have price has been underneath the daily baseline for quite a while, and we just now do have a trend flip. So again, the play here is still the same. Be looking to scoop it up somewhere between here and about 15 to 20% down to about 8 cents. You can go even a little bit lower. Again, these are ranges. The levels aren't perfect. You're going to be looking to take profits on this return back up here. I don't see a lot of, so here's one thing that's kind of nice. I don't see a lot of trapped buyers in between here and here. Just the appreciation and profit taking up in that area. So really the move from 8 cents to back up to 10 to 12 cents is not what's concerning. What's concerning or what's difficult is getting above 12 to 14 cents up to that 20-cent mark. So look for a lot of consolidation and distribution back up in that $12 to $14 range. But if you're looking to trade this asset, I don't think the buy is right now. The same thing. Look for the pullback. Look for consolidation. Look for that retest of that previous level of resistance. Or look again, what I said earlier. Look for that sideways. Look for that sideways kind of bull flag to form here, and then take the break to the upside.
All right, well, that was a pretty extensive look at SLP. We are kind of at the top of the show here. It is 90 minutes in. I don't know how many more requests we're going to be able to squeeze in, or if we want to move to the exit. Justin, how are you feeling?
Let's do one more request, and then we'll head out.
All right. In order to pick one request out of the many still remaining, I'm just going to kind of shout them out individually, and at least people will get their name rung today. Let's take a look. Justin, tell me if any of these tickle your fancy. Mike Maker wants to look at Solana and XRP. We got another one here from ETH1. He wants to look at SFP. We got a question from Alex A1SG. How does Doge look for a short on the daily time frame? We have one from Fifth, Ronan, Iris, and Ocean. We have OVR coin for cybernetics. There's also an Ant USD for Xavier. Caderna still on the list for today. For GBU, Professor Wally, he wants to look at Caderna on KuCoin where the volume is. I got another request here for Samo. Samo for Mika Smith. If there's requests, I'd really like to see them on Samo. Someone wants to look at Sand. Boris Bitcoin asking Justin if Sand's a short. Van Frick, CRO, and Neo. Finally, their last request of the day, Crypto Cats, NVIDIA, and BNB. Anything sound interesting to you? It was a lot.
Well,
it was a lot.
GBU Wally, thank you so much for the $20, my friend. We're gonna have to take that super chat and that request. That's just it's kicked right to the top of the list. Thank you, my brother. Let's take a look at Kadena right here.
Yes.
All right.
Let's do it.
All right. So KDA. Let's get our
KuCoiners.
All right, so KDA 96, we got a top 100 coin here. I love looking at top 100 coins. They often have the best. And what I like about this is that this is not an ERC20 token, so we're going to have a little bit of different tokenomics when we're looking at distribution and accumulation here. Total supply of 1 billion, circulating supply of 156 million. That can be good and bad. A lot more to come onto the market, but again, a lot more that can be used for their marketing campaigns. Which, just if you guys don't know this, marketing campaigns are one of the most important fundamental concepts to look at when looking at whether something's going to appreciate. The chart can kind of tell you that. The chart can tell you the levels. Moving on. Okay, let's go. We are going to do a KuCoin here. Let's just kind of briefly glance. Up over 5,000% the last year. As we can see, the momentum has waned. So we've got a nice, good uptrend here and good continuation overall, just by looking at the biggest ones. Like that market capitalization, again, good rise. Not, again, up on the upside, but again, I'd say the overall trend for the last, let's see here, it's going to be the fourth. Overall trend lately today has been a little bit to the downside, but again, a good appreciation of the last few days. We'll go to the chart here in a minute to see what that says. Again, we're going to be looking at. Okay, so the biggest one is going to be KDA BTC. All right, so we will look at KDA BTC because we want to look at where the liquidity is. We want to look at where the volume is, and let's just take a gander down here. Interesting. That's going to be a little bit of a typo. We are actually going to be looking at a KDA USDT on KuCoin. Even though this is a glitch, volume percentage can't be over 100. But I digress. Let's go look at KDA USDT. Okay. All right, we're sticking to the 4-hour chart here. It's been serving us well. This is a very different chart from what we've been looking at. We're basically looking now at something like the Bitcoin chart and Ethereum chart, where we've got something, honestly different from that, because we've got this oh, how do I want to characterize that? Not really symmetrical triangle. If we take those chaos bands out, if we take those, here's what I'm talking about here. Talking about this structure right here. Let's pull out some trend lines here. Let's see here. So we're gonna measure from candle bodies and do our best fit. And here's the down. Yeah. So basically wedge. Basically looking at that wedge, but I prefer to look at that kind of just more as a bullish consolidation formation that breaks to the upside. So we've got a couple potentialities here, and we're going to get rid of that because I prefer using the order block concept anyways to map out that support and resistance. So this is very different, where previously with Smooth Love Potion and GALA, well, with GALA, we were looking at something that was consolidating and was giving an actual pretty attractive 4-hour signal, like in the now, and looking like it was getting pretty choice and close to buying, but there hadn't been this big explosive parabolic growth. With Smooth Love Potion, kind of similar. We do have that big explosive growth pattern, but we had that massive overhead resistance, and we were just kind of in between those two ranges. Essentially, still a range trade, but with a little bit of a flavor of recent price appreciation, aka the P&D. With Kadena, we have something very different. We have something that's in an uptrend. Seems to be is obviously in a blue sky breakout, and we've got a long way down. So let's just keep it simple. Kadena's in an uptrend. This is not a bearish market. This is not a bearish market at all. I would not be looking for shorts. I'm not a reversal trader. I am a trend trader. I look for the overall strength of the trend, and I look to trade in that direction. Let's look at some key points here. Let's see here. We've got nice volume spike leading to that continuation. And then we start getting the wicks and the dojis as volatility starts creeping up. This is likely, okay, so the first thing this tells me is pullback or correction down, but likely continuation. I don't like to call tops. I like to see things continue, just more over than not they do. We do have, again here, we do have ISA spot getting overheated. What I do like, so one thing to point out here too, is it didn't give us a sell signal. Hold on one second.
No problem, take your time. Read a couple of comments here.
Okay, sorry, I'm back. I just had to let my dog out the door. It was coming over here and giving me the eyes.
Gotcha, no problem.
All right. Okay. We do have, again, our momentum oscillator getting overbought, and we also start to see our positive delta start to wane here in the form of Wadatar explosion. So again, we have that nice rising explosion level with an entry signal right here, basically on the break of the resistance. Not the cleanest break, obviously. Unfortunately, this is the candle that you'd be visually looking for, because that's that strong candle body close with little to no wick that breaks above that level of resistance. But actually, WADA is just one candle early. Printing that positive delta, letting you know that and the momentum is rising, and momentum is going to rise anytime we switch from small candle bodies to the large candle bodies. That is just very simply, that's the definition of momentum. It's used for underlying trend strength. So if there's little wicks and large candle bodies, that's a high momentum market. If there's little candle bodies and high wicks, that's a high volatility market. That's typically not a market you want to be trading in unless you have a very effective like algorithmic bot or high frequency trading or things like that, which again, those people don't watch YouTube shows. So maybe they do. I don't know. So let's just map out some levels. So we are going to, honestly, just the best case for this, since we are in an uptrend, is going to be to use market structure. It's not typically the way that I do things. I haven't made a ton of money using this, but just for analytical purposes, for getting a sense of where we're at, it might just be the best method available to us. Let's go ahead and just for funsies, extend this. Extend left line. Let's extend that to the left and see if we have any confluence with that. Not a whole lot. That's okay. And get these candle bodies as well. And again, the reason I use candle bodies as opposed to wicks, I just kind of want to explain that in detail. There's not a right or wrong way to do it. Actually, we'll go ahead. There's not a right or wrong way to do it. But the reason I prefer to use candle bodies is because Again, it goes back to the concept of your lines are never going to ever be perfect. Like price might on a blue moon actually stop for some reason at your line. It's not because your line was perfect. It's because a lot of other people drew the line the same way and decided to take action there. There's going to be an infinite amount of times, or maybe not infinite amount of times, but there's going to be an equal amount of times where people have drawn their lines slightly differently from yours, or they draw their lines the same as you, but they choose not to take action there. It just all depends on what happens in the market at that moment. Okay, so what I like more about using candle body closes for drawing trend lines is because they're just more generalized. Yes, obviously there's a lot of liquidity up here in the form of wicks. The market did move that far, but if I just go ahead and kind of lower the bar down here, then I feel like, in my experience, I not only am I not surprised or upset, for example, when my line isn't hit or it doesn't work out perfectly, but it also just gives me more wiggle room, right? You're not trying to hit that exact sniper wick. You're trying to get that more generalized entry. Okay, so now that we've got that level, I want to get some order blocks in here so that we can see if we've got anything that's controlling the market right now. So let's take right here the last up candle in an uptrend before a correction. Same as always, it's going to be this baby right here. We can see it did act as resistance from October 21st all the way through about 2 days ago when we broke out. We do not want to see a full correction. Actually, this is gonna make some of your heads explode because I'm about to pull out fibs, because that's actually the best analytical tool we can have when something's in blue sky territory. We've got a controlling level of liquidity here that was broken down in the $7.60 mark down to the $7.30 mark. I want to show you guys something that I think is going to be pretty interesting. We're going to take the bottom of the uptrend and we're going to map this out to the top here and take a look. Okay, so let's zoom in on that bad boy. 3A2 retracement, and now I want to see the extension. I want to see how far that went. Trend-based fib extension. Okay, so here, and down. Okay, yeah, about a 1.618 extension is exactly where we hit. We did actually go just a little bit above that. So what we would be looking for now, I mean, this is just kind of the best way to do it. And again, this is going to be more of that herding effect in trends, because there are a lot of traders with a lot of money doing this exact same thing. Let's delete that, sorry. A lot of traders with money doing the exact same thing. And that's why sometimes in these situations, just for the purposes of TA, or when you don't have any other option, looking at where the hot spots are going to be, looking at where liquidity is likely going to be, can actually be very helpful. So we're going to measure our fib from the candle close of the last red candle in that kind of consolidation area, and we're going to peak that up to the top here. So whenever markets are really hot, I like to do the 236 or the 382 extension. That's going to give you the best entries. Again, another popular one's going to be the 0.5, but typically when I've done that in the past, when I actually had when I actually was using fibs way back in the day as my actual uptrend strategy, 0.5 would be my targets, right? I would buy, I would do 0.5, I would do 0.5% retracements and then target 2x extensions. I actually want to give a shout out to, he's probably not watching. I don't know what he's doing. He's probably a billionaire right now. Hunter, old friend of mine who actually kind of turned me on to that method. But anyways, so we're looking at about the $8.33 mark here for retracement. That's going to coincide with our previous level of support. So kind of looking for those sniper entries. That's where I would be looking for. Again, we do have some waning momentum. We do have kind of that big volume spike, but nothing, that volume didn't come in like it did over here. Look at the size of that big green volume bar right there, and it even had some continuation following it. Now, volatility is increasing, momentum is waning, which does signify a turning point in the market. We do have a pretty decent buyback here on that attempted bearish engulfing candle, but this does look like we're in a profit-taking area for Cadena. So that's probably what you got. What's up, Tenacious Fee? Good to see you, brother. That is likely what individuals who are in this market right now should be doing, looking to be taking a little bit of profit on Cadena right now for their swing trade, looking for that pullback entry. And again, holding on. Like this is the area, like once you take this profit, right, I would be setting a trailing stop all the way down here at about $5.42 and waiting for that baby to rise. Now, if you get back down to this area and we start to see a trend break, we get back into this consolidation area, that means you're going to have to wait quite a while for that continuation to get more of that. It's actually Jason with a voice to get that continuation. But Kadena, it's in a profit-taking area for me right now. I don't see a trade setup that just kind of conforms with my strategy. I've plotted out a few levels for you guys to be watching here for potential pullbacks. You can always get a little bit more precision with those levels when you actually get there to look at the lower time frames and be looking for like those volume spikes, those oversold signals, things like that, some things of that nature. But other than that, I get waning momentum from Water Explosion. But honestly, we have a profit taking signal basically right over here where we see initial profits being taken. We've got that kind of next hurrah right here. I would be taking profit right here at this area. I would be, but I'd be holding a pretty significant portion of my position if I entered here. I'd be taking maybe like 50% of my profit here, waiting for that pullback, maybe re-adding on the pullback, and then looking for continued price appreciation here. But we do look a little overheated, and sideways consolidation here, followed by continuation, or maybe a pullback to the $8.30 mark, maybe even a little bit lower, is possible. Anything's possible, but that's what I see. GB Wally, thank you for the tip, man. I'm sorry that I don't see a really good trade setup here. But I think the best advice that I can give is it looks like the market's taking some profit right here. Don't be too quick to swap it all out. This definitely can have some legs, especially based on the size. Let's do something really fibby here. Let's take a measured move using fib extensions. So what we're going to do is we're going to use a trend-based fib extension. And we are actually, no, here's what we're going to do. We're going to go from the height to the bottom and then up to the break is what we're going to do. Okay. So as you guys can see, we basically did do a perfect measured move. So I've measured I've measured the height of the body of this pattern, basically this symmetrical wedge, this symmetrical triangle, whatever you want to call it. This chart pattern, we basically did do on that break of resistance, we basically did almost perfectly hit that 1-to-1 ratio. So your next target, just when we do blue sky breakouts, just kind of fibs is just kind of the thing you got to do, is going to be that 1.618 up at about $11.11. And if you're feeling real froggy, let's throw a 2 on there. Why is my 2 not on here? Let's just go ahead and get rid of the 3.618, make that a 2. The way it should be. Oh, sorry. These are negatives. $11.96. So, again, looking for this to go up to the $11 to $12 mark is going to be kind of your next targets following this area for price appreciation. That's all I got.
All right, brilliant. Let's go ahead and get into the outro, guys. Nice hour, 45 minutes passed by just like that. Sorry we couldn't get to every last request as, let me have a look here. There was a comment here I wanted to cover earlier. I think it came from Dark Rico. He says, each of our analysts have our own skills and style in different markets. It gives us a good overall outlook. Justin, indeed, is a great educator. But there was a comment here. It came from Dark Rico, and he says, I think Justin's going to have to start doing super chats on chart requests, as he does give amazing analysis when he does cover them. Yeah, guys, I don't want to cover anything behind the paywall. I don't want to be greedy. I love doing what we do here, guys. We love going through all the requests the way we have been for a good year now or more. In the current format where, we don't really ask for super chats or that kind of support, although we do greatly appreciate it. But in Justin's case, it's a little unique. He does take a lot of time to go through each request, guys. So something we have been considering that Dark Rico just described here, we might give priority on Thursdays, Justin days, to super chats. I don't want to have to do it this way, but I think it will have to, because seems like we can only get a handful done, and you guys bombard us with requests. If you do want to cut to the front of the line, we're probably going to do an official Thursday policy of super chats indeed. So there's that. Thank you, Dark Rico, for that idea. I think it's a splendid one. We'll go down that route. In the meantime, we're going to get out of here. We're going to go to the outro, which involves putting Justin back on cam. Justin, you want to hop on the cam, turn this way, and I'm going to put you on screen right now. Here we go. All right, your boy Justin returns to the webcam scene. here to say his goodbyes. Justin, you got the screen.
Thanks, man. I appreciate that, Jack. Thank you guys, everybody, for joining us today. I hope you guys enjoyed the analysis and breaking down everything. Sorry that I couldn't get to all of your guys' requests, but Jack did make a good point. I do like to take my time, and I really enjoy teaching and looking at these different concepts. And this is actually helping me immensely, because what I'm doing right now is not only editing the current PTP material and adding some new content to it. Things that I've cooked up, things that have worked for me over the last couple of years, things that I didn't get the chance to add in the original format of the course, but also making new courses for complete beginners, not only to trading, but also for beginners to technical analysis. So, for individuals who see what I do, who like the conviction and strength that you can get from just understanding the way markets move, and understanding not exactly like what to do everywhere. Like the point of TA is not to know what's going to happen. It's to know what you're going to do when things happen. Right? I never know like which way the market's going to move entirely. Like that is impossible. There's a large aspect to the markets that it's statistical theory, Bayesian random walk. But you can discipline yourself. As Will Smith said, self-discipline is at the core of any profitable pursuit. You can discipline yourself and educate yourself enough to know and develop a strategy for what to do in those areas. And believe it or not, technical analysis is considered like voodoo to some individuals. And it can be if you use it in the attempts to try to forecast what the market's going to do. Bad tool for that. Technical analysis is best used as a tool to determine exactly what you could do that has a statistical probability of being profitable when certain things happen. And just over time, as you increase your skills, it just becomes second nature to you. You see a chart and you're like, oh, okay. I can't even look out my window and look at the Rocky Mountains without seeing chart patterns. So, thank you guys for joining me. I am going to, so this is big. I do want to touch on this before we go. This IR6 provision bill, I think it's 6050I. This is huge. This is really, really important, right? This is very important, and I cannot understate this enough. So I am going to take some time and take the letter that I sent to my representatives and make some simple edits to it so that individuals can just simply copy and paste it. I'm actually going to post that everywhere I possibly can. I'm probably going to post it on Twitter, but most definitely hop in our Discord. I will be posting it in the announcement section and the general chat section of our Discord, so that if you guys, which I highly encourage you to, this is extremely important. Do not be lazy about this. Like if you think that your voice doesn't matter, then it doesn't. But if you think that your voice does matter, then guess what? It does. So speak up, take a stance. This is our industry. This is our space. And this is also your profits, right? These are people trying to crack into your wallets, crack into your financial life, crack into your privacy, peer back, command and control. And that's not, we just know this from empirical evidence. It's not the way that anything moves forward. It's what instantiated power structures do when they're scared and dying. So do not let them. So please help us out. And I'm going to post that so you guys can send the letter to your representatives. I'll also post a link so that you guys can find your representatives if you have never done such a thing before. But it's as simple as shooting them an email, calling them, sending a letter. That's all you got to do. In this case, I'd recommend giving them a call. You're likely going to leave a message and then shoot that email out. Believe it or not, it does matter because so few people actually speak up. And if 10, 20, 30, 50 people do just in a small area, that matters. It matters. So,
Word.
Your part, guys.
Well said. Well said. Great way to wind things down, guys. Thanks for kicking it with us for a nice 2-hour installment, guys. Much love to you all. We'll be back tomorrow. Friday installment comes your way in less than 24 hours. Alex will be here. Wait, is it Alex? No, it's Jason. Sorry, it's Jason tomorrow. Look forward to kicking it with you guys tomorrow. We get to more requests and more. In the meantime, much love to you all. Peace out. Shout out to Justin. Thanks again. Good to see you on Thursday, my man. Much love to you guys. Peace.
Later, guys. Have a good one.